What's up, everybody? Sheila Bair, who served as a federal regulator when the mid-2000s housing bubble popped, nearly taking out the entire financial system, said home prices today are bubbly following years of rock-bottom mortgage rates. When rates were cheaper, a lot of people wanted to buy. You ended up with really frothy price increases. That was pretty predictable, said Bair. So does Sheila Bair think that home prices will continue to go up, or will the bubble pop like it did back in 2008? So today we'll take a look at an article by Matt Egan and Anna Bonney for CNN Business titled, "The Housing Market Looks Like a Bubble, 2008 Regulator Says," to see what she's saying. And like usual, I'll chime in with my opinion as well. So let's dive right in. Sheila Bair, who had a front row seat to the subprime mortgage meltdown, is worried that today's housing market is unsustainable. The median home price of an existing home stood at just $278,200 in August of 2019, according to the National Association of Realtors. That figure has since spiked to $407,100 as of August 2023. Talk about a bubble. That's a classic supply-demand imbalance, Bair told CNN in a phone interview. A housing bubble can form when home prices rise to unsustainable levels. This can be caused by speculative buying, when people were getting adjustable rate loans that they should never have been approved for, with very little money down, and soon cannot afford their mortgage payments when the rates increased. These homeowners went into default, causing home prices to drop drastically, leaving a lot of people underwater on their mortgages because they had so little equity in the home to begin with. In other words, the bubble popped when home prices dropped and many people owed more on their home than it was worth. Egan and Bonney write that a bubble can also be caused by irrational exuberance, in which a surge in prices leads to a buying frenzy. Cue historically low interest rates during the pandemic housing boom, causing a lot of people to want to buy a house, and we have the situation we're in today. Home values that have gone up more than 40% since 2019. Bair tells CNN that she believes that home prices need to correct downward, but is not confident that's going to happen anytime soon due to the shortage of homes on the market. And she doesn't expect the bubble to violently burst. If supply remains constrained, this could go on for some time, said Bair. According to the National Association of Realtors, there were just 1.1 million unsold homes on the market as of the end of August, down 14.1% from the year before. And according to Redfin's latest housing market update, new listings of homes for sale are down 3.9% year over year, and active listings of homes for sale are down 14% year over year. Letting that bubble deflate a bit would probably be a good thing, said Bair. People who already own their home, and I'm one of them, don't want to hear that. But for those who want to own, I hope home prices do come down. Jeremy Grantham, co-founder of the investment firm Grantham, Mayo, Van Otterloo and Company, or GMO, made his name predicting the dot-com crash of 2001 and the global financial crisis of 2008. Grantham shares Bair's concern about a housing bubble. He's been warning about an eventual plunge in home prices around the world. Real estate is a global bubble, Grantham said on the Compound and Friends podcast last month. Home prices will come down. 30% would be a good guess. Unlike Grantham, Bair does not see a repeat of the 2008 housing market crash, which caused the Great Recession, but instead a more mild correction. That's in part because a typical homeowner today has a lot more equity in their home than a home buyer did back then, especially with the drastic increase in home values over the last 4 years. Only 1.1 million homes, or 2% of mortgaged properties, owed more on their mortgage than their home was worth in September, according to CoreLogic. That's a small number compared with the amount of homes that were underwater during the subprime mortgage crisis, which topped out at 26% in the fourth quarter of 2009, according to CoreLogic's equity analysis, which began in the third quarter of 2009. In addition, lenders are being much more strict in their criteria for loan approval today than they were back then, hopefully preventing people from buying a house that they really can't afford. I see much less speculation in the housing market today, thank goodness, said Bair. Even if home prices adjust a bit, people should not be underwater. And not everybody thinks home prices will adjust or correct. Goldman Sachs expects U.S. home prices will increase by 1.8% this year, and then accelerate to 3.5% 3% growth in 2024. And CoreLogic forecasts that U.S. home prices will increase by 4.3% between June of 2023 and June of 2024. This is due to a lack of housing inventory. Fannie Mae CEO Priscilla Almovidar said it's highly unusual that home prices haven't taken a bigger hit from these high mortgage rates. What has surprised us the most is the stickiness of home prices, Almovidar told CNN in a recent interview. Supply is the issue. There is no place to go. There is a lack of inventory. And Lawrence Yun, who's the chief economist for the National Association of Realtors, says that buyers shouldn't hold their breath waiting for a drop in home prices. While a temporary dip in prices is possible, Yun said a prolonged drop of 10 to 15% cannot happen in this tight supply market. There is not going to be a home price crash, Yun told CNN. When you have a housing shortage, home prices simply cannot decline in any measurable way. Egan and Bonnie write that in many ways, today's housing market is the polar opposite of the market that preceded the Great Recession, which I find really interesting. They're saying that back then, reckless mortgage lending helped create a situation where demand became artificially strong. Eventually, it collapsed, and the market was left with way too many homes. This makes sense because the buyers back then were not really qualified for the loans they were approved for. So when rates went up or prices went down, they couldn't afford their homes, therefore causing so many short sales and foreclosures, which ramped up the inventory drastically. Today, according to Yun, we have an imbalance the other way. Too much demand and not enough supply. The NAR, or the National Association of Realtors, has estimated the supply of homes needs to basically double to moderate home prices. It's creating social inequity. The only way out of this situation is we have to induce more supply, said Yun. I agree with Yun that the housing market is unsustainable and causing our affordability crisis to worsen. Real estate is very localized, so what's happening in one part of our country can be very different than what's happening in another part. But the one thing that is consistent throughout our entire country is that mortgage interest rates are near 8% and home prices aren't coming down enough for housing to be affordable. Where I am in the DC area, it's literally house by house, where some houses are still selling in multiple offers and going way above asking, while other houses are sitting on the market week after week getting price reductions. According to Redfin, 30.7% of the homes for sale in the 4 weeks leading up to October 8th sold above their list price, while 6.8% of the homes for sale each week had a price drop. These are national numbers. The median days on the market is 32 days, and 40% of the homes for sale sold in the first 2 weeks. So good homes are still selling quickly. And by good homes, I mean those homes that show well and are priced right. But what are you guys seeing where you live? Jesse Park, a U.S. economist that leads a team at Bank of America, he believes that we are in for a housing recession similar to the 1980s rather than 2008. If you missed last week's video on Park, definitely check that out next. Thanks for watching. I do appreciate it. Bye!